Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Present and ready. Bob, welcome. Good morning. Raymond, Michael, Ted, all good. How are you guys doing? Let me get ready too. Go over my earnings trades. All right, I think we can start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel, and today we're going to have a live trading room open to trade stock and options. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. If you're new to trading stock and options, I encourage you to visit the link on your screen to understand the risk associated with trading stock and options. I'm not a financial advisor, not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Should not be assumed that the future trade picks will be profitable or equal past performance. All right, trading psychology is important. The goal is to become a disciplined trader. Confident trader. How do you do this? Few concepts in trading psychology. One is self-awareness. The other one is the economy of control. The idea that you have process versus outcome. And process is always dependent only on you. Only you can control your thoughts and actions. So you need to have a process where you always follow it. Outcome does not depend on you, right? Outcome, and you cannot control the thoughts and actions of other people. Sometimes you have, positive outcomes, sometimes negative. But the process is very important. What does the process mean to me? Keep a journal, have a pre-market routine where you read the news, review your positions, and have a checklist. Before you enter the trade, you have a checklist that you document in writing in your journal that consists of why you got into the trades, target gains, stop losses, and kind of go through this positive and negative visualization exercises to determine, what's the maximum drawdown on your position. So let's look at spiders. We didn't have a CPI data today, right? That's a kind of a binary event, which very hard to predict the outcome. It came in better than expected, right? Initial reaction, market is up. So before that reaction, based on our model, we see 408 support, 412 overhead resistance. You do have a CPI data. Model cannot be trained on the CPI data and what the reaction to the CPI data. So right now we are trading at 414, so slightly higher than we're market expected, right? So there's two ways to interpret this data, right? CPI data is better than expected, right? Even in services data, but still elevated, right? It's not at 2%. It's instead of, I think expectation was 5%, right? and it came in at 4.9. But better than in Europe, right? In Europe, it actually came in higher. So inflation is on the right path, and you can say that I think we can get to, let's say, 418, we're almost there. It's 1%. So for day trading, you might say, 1% is enough. Or you can look at the, weekly chart and basically say, if we break through 418, and I think we're going to break through 418, we will revisit August high, right? Not a lot, but few stocks like Microsoft, Nvidia, they're already at the August high, or even slightly higher. So if you're in the soft landing camp, you say, listen, I think we're going to break this level, 420, and we're going to get to 430, fine. Then how many shares can you buy, right? What's your stop level? So we have, I would say right now, we're at 414. I would use, unless you're doing day trading, I would look at the reversal, 410 is your support, right? But the longer term, I would look at, and let's zoom out. Let's do it to 1 hour chart, right? So immediate support is the reversal, right? Let's say, CPI data, people still digesting it, right? The interest rates are moving. So that would be your first level of support. And that's what the model predicted, and I agree, right? You could have a reversal, and if we drop to 408, something doesn't make sense, right? Your immediate overhead resistance is this reactionary highs, right? We had it on May 3rd, May 8th. We need to break through this level. So this is the first resistance. We'll see where we're going to close today. And the second one, resistance. So not much has changed in terms of these levels. We talked about these levels. So support 1, support 2. So let's say bullish, right? You basically say, listen, interest rates are going down. Unemployment is still low. And earnings are better than expected. The economy is extremely resilient. I'm bullish. What's the stop loss? I propose 404. That's a 50-day moving average. I think the entire soft landing narrative is in trouble if we break through S2 to the downside, right? So then I would reduce my long positions. So 410, right, or 414 to 404, it's 2% stop loss, right? So 2% stop loss. So if you invest in $10,000 in spiders, 2%, that would be $200, right? Or if you want to do it in shares, right, stop loss 10, so you can buy 20 shares. 20 shares would be $200. From 414 to 404, right? So 418, 404, that's 10 points, right? So 10 points on a $25,000 account, I propose never risk more than $250. And in reality, you don't know where we are at resistance, right? We have to break through this. So maybe you put half of the order right now, and once you see the 13 level, then you put the second trade in. But going through this exercises of positive and negative visualization helps you determine the size, right? And position size is the most important decision a trader can make. And ideally, you want to be always consistent, right? Doesn't matter if you're buying spiders or you're buying anything that's close to beta 1 with spiders, you want similar amount, right? Similar logic, right? You invest $10,000, 2% stop loss. Right, if you see on the chart, the stock can move in the same period of time 4%, okay, then you reduce the number of shares. But position size is the most important, and I encourage you to practice this until it becomes mechanical and second nature, that you always invest, let's say, $10 worth of spiders, right, when you do these short-term or medium-term trades, and your stop loss is 2.5%. Right, if you're looking at few weeks, few months, and your stop loss is 5%, okay, then you invest $5,000, and 5% is $250. But it becomes a second nature, and number of position size is always the same. Number of trades is always the same. And you're just repeating the process. If you're doing day trading, you do it on daily basis. If you're doing weekly trader, you're doing it on weekly basis. If you're doing monthly, quarterly, but the process is the same. In terms of interest rate, I think at least initial reaction there is disconnect, right? I believe that we are trading kind of in the recessionary mode, right? Kind of the traditional stock market correlation, right? Money moves, either people are buying treasuries, right? Like TLT's up, but they're selling technology, right? But technology is up. this is the last year correlation, right? Where the bond market and equity market would move in the same direction. I don't think that's the case. So I think there will be divergence, right? Either technology is going to pull back and going to follow the interest rates, or interest rates will rally and follow the technology. The only way they're both going to move at the same time, I think it's, again, is this idea of soft landing, right? That interest rates are going down because, not because of the demand destruction, but because, I don't know why, because they're just dropping because, they're just dropping, right? So you have this disinflationary environment, but you still have a bull market and bullish economy, right? That is possible, kind of a last year scenario, just the opposite. But at least since March, we haven't been trading in that correlation. So initial reaction, I would wait, right? I would wait to confirm whether the interest rates are going to start rising, because we are sitting at the key support where we're not there yet. There was a rally, but at least the initial reaction, interest rate pulled back significantly. So 2-year yield down 1.5%, 5-year 2%. 10-year 1.25%. So I would wait. If the interest rates continue to drop, I think at some point you'll have a reversal in the market. If they reverse and interest rates rise to 3.6, maybe 3.7, then I think the market can still continue to rally. So that's one observation. And I would look at other asset classes to confirm, like, and gold continues to go higher. That would be a recessionary trade. Meanwhile, in terms of earnings, Rivian is up 10%, better than expected, better than Fisker, better than Lucid Technology. So they're up 10%. Occidental Petroleum down 1%, and Airbnb down 12%. Right, kind of a surprise. Everybody, it's on the news, kind of a proxy for health of consumer, and with all the traveling, and Booking.com and Expedia had great earnings, right? But so people are traveling, they're booking their hotels, right? The chart still looks pretty bearish, even though we did have an initial pop. So Expedia, Booking better. So Booking.com, strong travel demand. They're outperforming, right? Airbnb, also strong chart, similar to Booking, but you see a significant drop in retest of these levels. So that's something I noticed. In terms of liquidity, if you did decide to do iron condors, we didn't review them, but these are some of the iron condors I did, and they're all, you can close them now because they have not moved beyond estimated move. So let me just review my trades. Okay, I'm out of Airbnb, Rivian. Rivian is not moving. It's interesting. No, it is. Okay, it's just lights. Okay, and Occidental Petroleum. All right. In terms of news, next one is PPI data. I assume usually CPI, PPI is the same. So I don't think there's going to be a big surprise. I mean, initial jobless claims, right? This magic 250,000. People react to it, right? If it's above 250,000, then I think you can have a pullback. If it's below 245, then rally. I mean, consumer sentiment, same thing. But for now, we'll see what the price action will look like. If we can break out of this recent range trading. Good morning, Faust. John, good morning. Dave is more. Still bearish, bias, John. Yes, I mean I'm still in bearish camp, right? I mean I don't think anything has changed, right? But we're trading in the range. I personally watching small caps, right? Pretty bearish price pattern so far this week. We're in the middle of the week. Pretty muted reaction, right? I don't see any major actions. Regional KRE is still weak, right? Continues to deteriorate, so that's not good. I mean, I would watch Bitcoin. That has been a good proxy for risk taking. Also not a very, also sitting on the key support, no breakouts. So without these asset classes kind of breaking out to the upside, it's hard to have a sustained rally. And then I would also look at the leaders, right? One of the narrative in soft inflation is because you can't really have a recession as long as Apple breaking out. So doesn't look like we're breaking out, right? It's kind of facing this overhead resistance back to August high. Google, similar price action, right? It's kind of facing close to August high, right? This is August, yeah, August high. Microsoft, I mean, it did break through the August high, so Microsoft is an exception. It's almost getting close to all-time high, right? And then Amazon, not breaking out. It's still kind of a muted reaction, pretty bearish chart. Tesla, also kind of a very weak price action. The JP Morgan is another stock. So for now, charts look bearish to me. There's no broad-based participation. So for now, I'm just observing the data and price action. Good morning, Fred. How are you? All right. Anything else? Any other questions? Okay. Fred, IWM, I mean, I haven't changed my opinion. The price action, I mean, it's still a pretty bearish price pattern, right? As long as we are below this trend. I mean, we did have a breakout in January, but now we're pretty far away from the downtrend, and so far reaction has been muted, right? And we are approaching, I mean, we're middle of May, a couple more weeks left. You already can see volume is going to start dropping. So for now, I'm still bearish. I don't see any positive momentum. And it has to, for me to change my mind, probably it has to break above 200, right? If we all of a sudden see small caps are breaking above August high, well, then soft line, the soft line, the narrative was correct, right? But until then, not so sure. Meanwhile, let's see. What's the price action? TLT is up. 5-10 year down significantly. High yield is up. High corporate bonds are up. So I still think there is a disconnect. So we'll see. We'll see in a couple of days if the correlation will be back to the way it was since beginning of the March, or is it similar to last year where just everybody's buying both treasury and equities? Could be. Could be. We'll see. Semiconductors also pretty, kind of not going anywhere, pulling back. Arc Innovation is oversold, so it is bouncing back. Gold slightly higher, silver is up 0.5%. Let's see what else is interesting. What else is reacting? Materials, home builders, metals and miners, emerging market, Germany, all underperforming. China is actually down. Industrials are underperforming. Energy is actually down. So I think VTV, right, everything but the technology, I would say pretty bearish price pattern. Right? Kind of, I don't know what you want to call it, but inverse cup and handle, right? So kind of this type of setup, right? So pretty bearish. Anything outside of technology. Yeah, the Dow Jones slightly higher. Spiders is up 0.5% because QQQ is up 1%. ARC is up. Everything else, JP Morgans of the world, regional banks are flat. Oh, finally, CMG is up. Let's see. All right, CMG. CMG is up. Okay. Any questions? Complacency in VIX is confusing me. Lots to worry about. VIX is low. Yeah, VIX kind of doesn't make sense. I mean, it does make sense, right? Because the soft landing narrative is winning, right? It's kind of, we've been in this uptrend since October. So VIX is low because nobody's hedging their positions. I mean, usually it is a contrarian sign, but everybody said at 20 there will be a spike. Now it's 15, right? So you just don't know where that support is, where the floor is for the VIX. Fred, yes. Still bearish. All right, let's review positions. All right. So before a few announcements. YouTube. So we are live on YouTube. Thank you for participating. We do have a broadcast. If you haven't clicked on subscribe yet, please click on subscribe. And if any of the videos you like and you find them useful, please share them on social media. You can just take a link and put it in your email or Facebook group or anywhere else you see participation of traders. That'll be greatly appreciated. And then again, we have marketing arrangement with Tradier company. They are given this great offer in terms of commissions, right? Only $10 a month. So you can trade as many option contracts as you want for $10. I think if you're trading 200 contracts a month, it's they waive the fee. But I think majority of a lot of people on this broadcast are trading options and probably more than 10 contracts a month, and you're probably paying at least $1 per contract. So anything above 10 or whatever your commission schedule looks like, that you can have significant savings. So I'm gonna put that in your list. I know some of you are already using them, and so I appreciate that. Delay default when you an emergency fund mechanism. Jeff, I mean, I'm not an expert on the ceiling, right? If U.S. government default, but my understanding that it's not going to be like, sudden stop, right? They first have to, not pay federal employees, so federal parks will be closed. Some of the federal agencies will be closed, right? So it's, I mean, they do have to pass a legislation. I mean, they do have to agree to raising the ceiling, right, of the debt ceiling. So if they don't agree, then, and we've had these situations before, then, some of the payments will be, but it'll be gradual, right? And at some point, they will reach an agreement. For now, market is not reacting to this. I mean, the credit default swaps are out of control when it comes to secure, federal government debt, because there is a risk, right? We've seen this inversion with 1 month and 3 months bills, right? They're still 1 month pays higher than 3 months. There were, 100 basis points difference. Now it's only 30, right? Because we're getting closer and closer. But that's what everybody's paying attention to. And it looks like 2-year also start breaking down more, right? So 2-year took a big drop after the CPI data, catching up. And let's see. And you can see NFC turning negative, right? So that makes sense, right? Not NFC, VTV, value stocks. Technology is still up, I mean, spiders is still up, but you do have a reversal, and that makes more sense, right? Yield is dropping because of fear of recession. The Fed, you disconnect between what Fed says and what the reality is. So rates will be dropped, but not because inflation is dropping, but because, demand deceleration, right? Demand destruction. So I would continue to watch 2-year and 10-year as the main indicators of where the equities are going to go. All right. Okay. 8:45. Let's review the positions. All right. Okay. PayPal 80. I didn't close PayPal position. Okay. That doesn't make sense. I thought I did. So I did do PayPal iron. I mean, just the call spread. Yeah, I think this is old. Probably some cache servers. So I apologize for that. I did close it yesterday, unless this is old. Let's try it again. Okay, so it was just cached. So PayPal, I'm out. This was the credit call spread. I didn't trade puts, because I'm obviously biased a little bit to the downside, and that actually worked out well because PayPal, making new lows, right? Making new lows. So fintech is in trouble. I mean, there's a lot of competition, with Apple Pay and others. So that makes sense. CMG, Chipotle Grill, right? I mean, models does see certain stocks in uptrend and obviously outperforming the indexes. This is a clean breakout. People, Booking.com, Expedia, CMG, just a reflection that consumer is still strong and they're still spending, on certain items, right? And even more iPhones were sold than expected. So still strong, resilient consumer. You still see pockets of problems like Airbnb, let's say today. In theory, Airbnb should be up today, but it's not. So for now, still long CMG. Still bearish on small caps, right? I think I trimmed yesterday. I think before I left, I did trim the position. Yeah, so it did get filled. Half of the trade, it's a short trade, right? This is a quick, 10% profit in one day. So I took the profits, and then I have an order to close the remaining position at 80 cents. A small cap continues to be weak. We talked about NOC, kind of double top, double bottom. It's trading in this middle range. I'm watching 430, 435 as a stop loss. I'm a little bit concerned. I mean, supposedly, like Ukraine is starting this counterattack on Russia, right? So hopefully this will have a positive outcome. But for the Ukrainian, but for the stock market, it could be an escalation, right? It could be an escalation, but at least for now, it's weak, right? It's weak. It looks like it's falling, so I would watch this level, and if we make new lows, I would get out of the trade. So that's NOC. QQQ still bearish, right? I still think, hard landing narrative sounds better to me, right? Sounds like, not better, but sounds like it has higher probability of being correct. So I'm still bearish, especially going into summer. June, kind of in question, right? Because so far, no signs of pulling back in technology, right? It's kind of continues to stay above 50-day moving average, above 200-day moving average. Very bullish setup, right? We need to break through at least April lows to have any meaningful pullback. When is it going to start? I'm not sure. So September, I'm a little bit. I have more time, right? I have more time. We need some kind of a trigger. We talked about trigger. I don't know what that trigger is. If it's if it's not inflationary data, it's not unemployment. Probably unemployment, right? The biggest narrative, the soft landing narrative is unemployment is still low, right? So as long as it remains low, I don't think you're going to have a trigger. But if unemployment finally starts ticking up, right, that could be the trigger. That could be the trigger. When is it going to start showing up? A lot of people are projecting Q3, Q4. So it could be, somewhere in the summer where we start finally seeing the uptick in unemployment. All right, SH. If you're not comfortable hedging with QQQ options, SH is inversely correlated, right? SH should rally if the market reverses. SLV has been a good hedge, right? It's inversely correlated to the stock market. And TLT, right? So TLT, SLV, still bullish. I do have TAP, kind of not going anywhere. All right, let's look at TAP. Well, kind of classical breakout formation, flag, and follow through, right? Usually there's a follow through. A lot of it will depend on the market, right? If the market stays range bound or going higher, I think TAP will go higher. But if it reverses, then maybe not. For now, I would just look at a lot of pretty big price action in the bond market. Hasn't translated to equity market yet, so we'll just have to wait and see. But you can see value stocks already deteriorating. Okay. Bob, why are airlines and cruise ships are not doing better? It's a good question. I think the biggest narrative is that they're back. They had a huge boost. All right, they had a huge, jets? Huge boost from reopening, right? Reopening, people were locked in their rooms for 2 years. They finally said enough is enough. So everybody started traveling, right? And you have this huge rally, in 2023. And from October lows, right? From October lows. But then they pulled back because a lot of them announced that listen, we're back to pre-COVID schedule, right? And, And the prices start kind of slowly going down on airline tickets, so they drop significantly. Right, and this is another indication of potential, recession, right? Because in theory, if we have bull market, people need to travel, right? Both retail and corporate. If they're not, then I mean, we're still off the October lows, we're still off December lows, but obviously pretty big pullback because of this exaggerated move to the upside and anything negative to the downside. And Airbnb is kind of the same thing. You cannot say anything negative, because people are sitting on the edge. So if you say anything negative about your margins, right? I forgot, I think it was Airbnb, right? I mean, they beat on the top line, they beat on the bottom line, but their margins compression, right? I don't know, higher wages, smaller price tickets, I don't know exactly what it is, but there was a margin compression. And you have a 12-15% drop in the price. So everybody's sitting on the edge. You have to deliver positive news, right, on all ends. And if anything negative, and you're not, NVIDIA, Microsoft, or Apple, then you get punished. Thank you, Bob. Thoughts on XLP? Airbnb blame Booking on their decline. Booking coming into their business. Okay. Booking.com, you can actually rent an apartment. I mean, you can rent a hotel through Booking.com, but in theory, Booking. I mean, maybe people prefer now staying in hotels instead of, sitting in somebody's apartment. Maybe. I mean, I didn't listen to the press conference, so I don't. But obviously, based on the price reaction, there's nothing positive about this. Consumer staples, they're already kind of rolling over, right? They're at 52-week high? Yeah. So they're at 52-week high. Everybody's hiding in Coke, Pepsi, Tap, right? Procter and Gamble. But it doesn't look very, it looks like top building process, right? It looks like top building process. It looks like it's rolling over. I would watch this neckline around 76, right? Around 76. If it does drop, then, I would not hide in consumer staples right now. I mean, maybe you have an individual stock like Tap, and you think Tap can outperform XLP because it's, just a better represent, or Pepsi, right? Pepsi has been extremely stores. But XLP in general, I think, is in trouble. And in theory, if XLP going to roll over, then Tap will follow. So this is kind of a, I'm hoping, I just don't know when it's going to happen. So I'm hoping by that time I'll be able to squeeze, I don't know, 2%, 5%, another move in the stock. We'll see. Thank you, cool. Not a lot of price action in precious metals. How's Bitcoin? Is Bitcoin live? Why can I just give it? BTC1. It's actually up. It's delayed, but okay. So looks like spiders are rolling over. And this is actually where Stock Forecast Toolbox, I think, is very powerful, right? Because it did support, it did show 408 as a support, 412 is overhead resistance. We have a CPI data, better than expected. So now we're moving to 414, right? So 414, a lot of people say, well, Vlad, this model, it's not any good, right? It can't predict anything. But, the answer is, well, no, there's a new data point, right? CPI data, so model has to adjust. But you know what the pressure points are, 412, right? And as soon as we are at 412, you know that this is now a new support, right? So I would watch this level, right? If we break below 412, we're back to 408, 412 range, right? All this price action has been negated, right? I mean, if you're doing day trading, and you want to go long because you think this is just an overreaction, right? Then, this is your place where you want to consider going long, right? If you're a bull right now, instead of buying at 415 when the model says it's overbought, 412 is a better entry point, right? Because that used to be an overhead resistance. Now 412 is your support. You might want to wait for some kind of confirmation, right? We're going to have a volatile day, especially as interest rates are, falling off the cliff, right? But I would use these levels as your cues where the bulls and bears are going to fight, right? For which levels. You can rent house in private and booking now too. Okay, appears to be making inroads to the apartment house rental. Okay, thank you. I didn't know that. Okay, my wife does all these Airbnb and what's that one? VRBO or something like that. I don't know much about this, but yeah, Booking looks like a strong stock, right? It looks like an extremely strong stock. So they're obviously doing better than Airbnb. Too bad it's not very liquid. I always shy away because it's 70,000 shares. John puts one trade and and then the stock moves. So, but still a healthy chart. All price line, if I remember correctly. Right, I know either Expedia bought book or price line. Right. Okay. Thank you. It's 9 o'clock. Okay, we went through TAP, TLT, and then what else? XLF. Still bearish in XLF, right? I mean, this is, if Wells Fargo is, if this is a price pattern of Wells Fargo, you can really, and this is one of the better banks, right, or Bank of America, right? You can really have a very healthy, market, right? It's sitting at this support. So I'm pretty bearish, right? JP Morgan is best of breed, at least for now. Also not a good price pattern. Popish, right? And kind of starting pullback. Okay. Any questions? 9 o'clock. Views on Ford and automotive in general. I mean, this is a retail, right? So I would look at consumer discretionary first. Which also start breaking down. So automotive, like Ford, right? It's sitting at this 52-week low, right? This doesn't look healthy, right? Especially with all the, competition from Tesla on electrical vehicles. There's some crazy number Ford is losing on every electrical vehicle, right? They purposely don't produce these electrical vehicles because they just lose too much money on them. So Ford, General Motors, I mean, there's nothing good about these price charts. I mean, I know if you're a contrarian, this is a great setup, right? So you basically say, Vlad, but it has a support. I have very little risk, right? I know I'm going to get out if it drops below 30, right? If Ford, General Motors down 10%, I'm out. But it could, it could go up 30%, right? So risk is 10% to the downside, 30% to the upside. You like these contrarian setups. The only thing I would say is at least wait, I like that saying, just something I learned. Better be late than early, right? In trading, better be a few days late, right? Or even few weeks late than being early and see a breakdown. So if you think it's going to get to 44, personally, I would wait for something like this, like week 1, week 2, week 3, right? Or at least week 1. I mean, 1 is not enough, but at least like green, one more green, right? And on the next week, you're still breaking out. So as soon as you start seeing breaking out, okay, then you can jump on the wagon, right? But I mean, these are very bullish time of the year, right? November, December, February, March. We're approaching summer. I personally think we're going to break down below this level. I just don't know the time, right? I think it should have been done by now, but it's not. So, but at some point it will. So I would just give it a little bit more time. For now, every candlestick is red. That's not good. That's not a good setup. There is no, but on the other hand, it's not making new lows for the past 4 weeks. So that could be positive. So wait for, I would say, wait for a break above 36. Give up 10%. You know, you still, then you at least you have a higher chance of making 20%. Because if you get in now, I think there's a higher chance that you're going to lose 10% than, you know, making 30. Thank you for your question. Any other questions? Dollar is weak. That feeds well into soft landing, right? You can have a recession with weak dollar. That usually doesn't happen. Looks like QQQ is reversing back higher. Market is volatile at 412. So it looks like going higher, and rates are, we're trying to stabilize, right? So that's why. Okay. Any other questions? So we will have a closing bell. We'll research in terms of, let's see, in terms of earnings. Now that CPI is behind us, let's see. Well, we have Disney, right? So it has been very volatile. I would maybe personally gonna downsize the trade. It's all over the news, right? With all the political issues, a new CEO. So it's been extremely volatile during earnings, especially during earnings calls. So I'm personally either not gonna do it or downsize the trade, because it's like everything that Bob Iger says kind of just taken out of proportion. Other than Disney, let's see. Anything interesting tomorrow morning? I mean, JD, Chinese companies have been under pressure, right? JD does not look healthy at all. Alibaba also doesn't look healthy. The Chinese stocks got beat up. And that's probably the most interesting earnings. This US dollar TLT, I think, continues to decline. No, US dollar is DXY. So yes, if the bullish, the bear argument is kind of predicated and based upon this notion that the dollar has to rally, right? So if dollar breaks down and continues going lower, market is going to rally, right? So this is a bear scenario, right? So this is a bearish scenario for the equity market, and this is the bullish setup. So bears are kind of sitting in, you know, scratching their heads, trying to figure out why is dollar not going higher. That's a very strong argument for soft landing, right? Just as strong of an argument from bears that, you know, if 10-year yield breaks below this level, it's kind of in reverse. So, you know, it's a little mixed signals, right? So if this is going to happen, I think this would be bearish for the equity market. But if we bounce back, I think this will be bullish. Right, because in theory, if you're in a bull market, the economy is expanding, interest rates should, you know, we shouldn't go back to zero interest rates, right? Though that decade is over, right? Because of the financial crisis. In theory, you know, rates should continue to climb. If, you know, as long as we're in a bullish economy, we don't want, you know, I mean, that's how it's always been. But you know, I guess we have to wait and see. All right. Thank you, Jeff. Tava is coming tomorrow. Yeah. Yeah, no premium options. Great company. You could, yeah, if you want to sell premium and own the stock, then your liquidity might not be an issue, right? But if you don't want to own the stock, and you want to be able to get out of the stock without getting, you know, beat up, then I mean, it's decent volume. 6 million shares is decent volume. If there's not enough premium, then yeah, that's an issue. But at least volume-wise, it's pretty decent. All right, ladies and gentlemen, it's 9:10. That's all I have for today. Let's meet again at the closing bell. Again, consider Tradia.com as your brokerage if you are looking to save money on commissions. And please join me on YouTube. We're going to have a closing bell broadcast as well. Thank you very much and have a great day. Pause. Thank you very much. Take care.